To RealClearMarkets Editor John Tamny. We've got market watchers Jared Levy and Michelle McKinnon. Michelle, time and again when we discuss this, it's always been amazing. This notion that the markets see past the fears, and even today. What do you make of that?
Yeah, absolutely. I mean, Trump has been unconventional since day one, but the market is looking at the fundamentals. And what we're seeing is historically low unemployment rates, consumer confidence is up, and record-breaking corporate earnings, where over 90% of the S&P beat expectations.
You know, John, if that were to continue, I know that's a great backdrop here, that these numbers are far better than expected, that they're expected to be that way. But some of these companies do give a little bit of I call it guessing guidance about the effect of trade, and they're not enthusiastic about what could happen, but they invariably hope that it never comes to that. Are you in their camp that it never comes to that?
Let's hope so. I think the markets are broadly saying that. Markets never price in the present. They always price in the future. And so what we have to hope comes out of this is that Donald Trump means what he says about just zeroing out tariffs between the U.S. and the EU. And I think there's a very easy way for him to do this, is for him to preempt it and say we're taking down all U.S. tariffs against production in the EU. This would be brilliant for the U.S. economy simply because the American people are the economy. They'd have more competition for their paychecks. Better yet, companies most exposed to global competition are by definition the most successful simply because they are most keen to what's happening in the marketplace. Do it first and watch the world follow. We'd all be better off.
Jared, what do you make of that?
Good luck. You know, Trump has a very his sophomoric approach, right? Is kind of crazy. You know, he's poking fun at you know hundreds of billions of dollars in trade that could potentially have really deep ramifications, right? The IMF warns the potential of like $430 billion in detriment to the global economy. But I'm sort of in agreement, right? You know, I mean, if he projected that, hey, let's zero out tariffs and subsidies, which, by the way, we can't zero out subsidies, but let's zero out tariffs, to put that out there, it's a pretty bold statement. And although he makes a lot of crazy ones, I mean, that's pretty bold. It's pretty direct. And if he's going in there with the intent of lowering it down and really making something out of us, which he needs to, then yeah, I think we continue on. Markets are not believing that this is going to continue on, that there's going to be a full-blown trade war. Markets are pricing in my belief, in my estimation, that a lot of these issues will be worked out, you know, within the next coming months. Because remember, it's all about price. These companies are sort of buffering these tariffs now, but as that goes on, those price increases are going to trickle down to consumers, and that's when it becomes a real problem.
You know, Michelle, in the meantime, we're going on these strong earnings that are handily beating street estimates, the guidance that is still very, very upbeat. Now, I know we got year-over-year comparisons where the tax rate was much higher, but even factoring in the estimates for that, much better than expected. How long do you expect that you know, backdrop to be as strong as it is? How many more quarters can we get some juice out of this?
Yeah, I think we have definitely a couple more years. You're
couple more years?
Yeah, I mean, everything about this economy and this market cycle has been extremely long. So just because we're late in cycle doesn't mean that it's going to stop next year. We could be a couple years out for sure.
You know what's interesting, John? I discussed at the outset all the worries the market slough off. The trade thing is one thing. But the legal wagon circling around the president now with the release of this Michael Cohen tape tells you something that even on the Mueller front, the investigation front, not too worried, not too concerned. Do you share that?
Yeah, I don't think there's much to that. In fact, my guess for Trump is that he would be better off the more that Mueller and others came after him, because it would probably galvanize his base. Look at how well President Clinton came out of the witch hunt long ago. I'm guessing Trump would come out of this well, too. So I think markets are sloughing that to the side. But imagine the rally that you'd get if, in fact, there were some truth to this idea that we're going to get rid of what injures everyone, which is trade barriers. Like Jared, I'm not holding my breath, but it's fun to imagine on occasion how much better the U.S. economy would be if we were open to the world's plenty. So fingers crossed.
Yeah, it always comes back to that. Jared, another thing I always think about, let's say you're not a fan, and many are not. I know you've expressed reservations about the president's approach on trade. But I can imagine that, let's say, a successor were to come in. Let's say we still haven't resolved this. That's possible, by the way. and let's say we were to desist and to stop, wouldn't it remind Americans, wait a minute, these countries are still hosing us, and we've just given up trying to deal with that? So in a way, did the president, say what you will of his approach, put Americans on notice? This is happening right beneath your noses.
I think that it's important to bring up, because I think the majority of Americans don't understand the way that trade works and how these, there are imbalances. But at the same time, Neil, let's tell it like it is. We wouldn't be where we are today if not for really cheap goods from China. We wouldn't be where we are today if not for a lot of the imports we're getting from Europe. And you know what? The truth is, Americans we're pretty darn wealthy, and we're able to pay for these luxuries that we enjoy. And granted, some of the tariffs may be a little bit excessive. We could, bear, or enjoy a little bit of a reduction. But at the end of the day, we are prospering because of global trade. And yeah, we certainly need to adjust some areas. But I wouldn't get too hung up on it. I don't think that we're being treated as unfairly as people believe, at least in Europe. China, maybe a different story, but not in Europe.
Yeah, we have a lot of money, and we spend it, and we buy a lot of that stuff, to your point. Michelle, one of the things that's very obvious, though, is that the price of a lot of these goods that Americans are used to getting are going up even as we speak now, and they'll go up sharply. And I don't think a lot of Americans realize that. Do you think it's incumbent upon the administration to sort of prepare Americans for that? The president has touched on it more, and even yesterday in Missouri, but that, follow me for the good of this. It's going to take some time, but you'll be better off for it. But you are prepared for some sticker shock here.
Well, I think inflation is just very natural in a late in the cycle anyways, so people need to prepare for that.
This is man-made inflation here, you know what I mean? This is something that goes beyond the norm, right?
Absolutely, but I think at the end of the day, our hope is Trump's going to be able to figure out a deal and then hopefully contain a lot of that inflation.
Do you think that'll happen?
I do.
What if it doesn't?
Well, we can't base on assumption. What we know is that he's trying, and then we'll have to wait and see.
Well, your assumption was, though, that he will.
Yes,
okay.
I do.
I like touche, young lady. So, John, do you see the same thing? In other words, do you see that this all works out, and that's what the markets are playing, the assumption that it all works out?
Well, markets clearly aren't priced for it all working out because they still, I don't believe they've retraced their highs met earlier. The ideal working out is that Trump would stop negotiating altogether. What he misses is that countries don't trade. People do, and we're much better off when we have the whole world competing to serve our needs and selling to that whole market. Let's remember this quote, trade deficit is just an effect of we export shares of the most valuable companies in the world. The world wants them. That doesn't count in the balance. And what we import does count in the balance. And so that's all it is. It's a sign of great American prosperity. The less Trump does here, the better off. I'd love to see zero, though.
All right. We just might. Who knows? The hope springs eternal. Guys, thank you all very, very much.